Today we're going to be looking at chapter 4. We're going to do some exercises, and we're going to start with cornerstone exercise 1. So I'm going to share my screen with you. I've put it in Excel for you to look at because we're going to be doing a lot of calculations in this chapter. So Excel is probably going to be the way we're going to be doing most of our problems. What you should be seeing now is cornerstone exercise 4.1. And what we're going to be learning how to do today is we're going to be learning how to apply overhead and unit cost using what we call plant-wide rates. This is really something that we have gone over before in ACC 121. So this problem shouldn't be too much of a problem for you. What we're going to be doing is we're going to be calculating a predetermined factory overhead rate that we're going to use to estimate the amount of factory overhead. And we're going to apply that factory overhead to the factory overhead account. And we're going to also look at what happens to the factory overhead account and see whether or not there was under-applied factory overhead or over-applied factory overhead. So I want to start by looking at the instructions because they're very important. What we're doing in this company is we're producing two types of clothes dryers, a deluxe model and a regular model. This company is Seiko, and they're using a plant-wide rate. Now, in cost accounting, a plant-wide rate means it's the entire company's rate. We will also be looking at how to calculate departmental rates in this video. And eventually, we're going to learn in this chapter how to calculate overhead rates based on activity-based costing. But in this first problem, we're using a plant-wide rate, which just means we're using a factory overhead rate for the entire company. And if we're using a factory overhead rate based on the entire company's factory overhead, we will usually have an activity base of direct labor hours, or it could be direct labor cost, or it could be machine hours. What we're going to be doing is producing dryers, and these are what we call units. So for a plant-wide overhead activity rate, we're going to base this on a way to measure the activity for the units, or what we're going to do is we're going to determine how we are driving our factory overhead. And since we are actually producing units in this particular company, our unit rate will be based on direct labor hours in this problem, or it could be based on direct labor cost or machine hours. So in this problem, it is direct labor hours that we're using to assign our overhead cost. And it tells you that the company has the following estimated and actual data for the coming year. You might remember from Accounting 121 that we have to estimate the amount of the factory overhead so management can make timely decisions based on this information. If we waited till the end of the period and determined the actual factory overhead, it would be too late for us, let's say, to quote a selling price to a customer. So what we have to do is we have to estimate our factory overhead at the beginning of the period. And at the end of the period, we'll look at what actually happened in the factory overhead account and compare it with what we have estimated for that period of time. Notice they've given us that the estimated overhead is $2 million. The expected activity is 50,000 direct labor hours. Then they've given you actual information based on the dryers that we are producing. Our actual direct labor hours for deluxe dryer is 10,000. For the regular dryer is 40,000 hours. The units produced of the deluxe dryer are 20,000 and the regular dryer are 200,000 units produced. So first of all, we have to calculate the predetermined plant-wide overhead rate, and we will be using direct labor hours to do that. This would be done at the beginning of the period before we have incurred any cost for the period. So we use a formula to help us to calculate that predetermined rate. And the formula is the total estimated overhead for that period of time divided by the expected activity for that period of time, which happens to be direct labor hours in this problem. And when you divide the expected direct labor hours into the total estimated overhead, it will give you the predetermined rate. Again, that predetermined rate would be calculated before we have entered anything in our journals at the beginning of the period. This is an estimated rate. So what they wanted us to do is to calculate that predetermined rate first of all. And so this is how they've done it. We've taken the estimated total amount of overhead and we've divided it by our expected activity. And that gave us a predetermined rate of $40. We're going to use this predetermined rate to help us to calculate the estimated amount of the applied factory overhead. And the estimated amount of the applied factory overhead is going to be calculated by taking the predetermined factory overhead rate and multiplying it by the actual direct labor hours that we incurred during that period. Notice I'm emphasizing we're going to take the estimated rate and we're going to multiply it by the actual activity, direct labor hours, to get our applied factory overhead. Now in this problem, since we have two products, we're going to do an estimate of the applied factory overhead for both the deluxe dryer and the regular dryer. And the way that we're getting this is we're taking cell address B20, which was the actual activity and direct labor hours, and we're multiplying it by the predetermined factory overhead rate. So again, it's the predetermined factory overhead rate times the actual activity of direct labor hours for the deluxe dryer. That's how they got the 400,000 for the deluxe dryer. And again, it says to calculate the applied overhead for each product. You're going to have to be really careful when you're reading your information that you pick up on exactly what they want you to do. And so this is for each product. So our deluxe dryer we've calculated. Now we're going to look at the regular dryer. And the regular dryer, again, is your predetermined factory overhead rate of $40 times the actual units that, the actual activity, direct labor hours, which was 40,000 direct labor hours. So for the regular dryer, it was 1,600,000 as the total amount of the applied factory overhead. In part 2, they want you to calculate the overhead cost per unit for each product. So this is just taking this step up here a little bit further. We're going to take the applied amount of overhead for each one of our products, and we're going to divide it by the number of units produced that was given up above. So for our deluxe dryer, we got an overhead cost per unit of $20. We did this by taking the applied factory overhead, which was 400,000, and dividing it by the units produced for the deluxe dryer, which was 20,000 units. So that gives us an overhead cost per unit of $20 for the deluxe dryer. We're going to take the applied overhead for the regular dryer, which was 1,600,000. We're going to divide it by the units produced for the regular dryer, which was 200,000, and that will give us $8 as our overhead unit that we produced. Now, as always, they give you a what-if analysis. And in this case, they're saying, what if the deluxe product used 20,000 hours to produce 20,000 units instead of 10,000 hours, but the total expected hours remain the same? So they're using, since they told you the total expected hours remain the same, they're just telling you the predetermined rate is going to be the same, still going to be $40. The only difference is our actual hours that we're using to produce the deluxe product is 20,000 hours. So 20,000 hours times the predetermined rate will give you the applied factory overhead, which is 800,000. And since the 800,000 would be the new factory overhead that we would be applying, it is technically 400,000 more than what it would have been before. So the overhead is going to increase by 400,000. And since the overhead is an expense to us, if it increased by 400,000, it would mean that our profits will decrease by 400,000 to make the dryer. And so that's the what-if analysis for this problem. I'm going to move to the second problem for today, which is problem cornerstone exercise 4.2. And in this exercise, what we're going to show is the next step after we have calculated the plant-wide amount, the plant-wide amount of the factory overhead that we had applied. We're going to be disposing of our factory overhead account, basically. And so this problem has you doing just that. This is the Warner Company, and they've given you this information. They've given you the actual amount of factory overhead. So what I did is I created a T account, and on the left-hand side, I record my actual amount of my factory overhead, because overhead is an expense. It's going to go up on the debit side. So I just put what they gave me in as my actual overhead on the debit side to this overhead account. The applied overhead for this company, and notice they've given us 3 different balance amounts, and then they've given you the total applied factory overhead. The total applied factory overhead is the total amount of estimated overhead for the year. So in the previous problem, we took the predetermined factory overhead rate and we multiplied it by the actual direct labor hours to give us our applied factory overhead. In this problem, they just gave us the amount. So you're just substituting in what was given here. In order to find the overhead variance for the year, you compare what actually happened at the end of the period to what you had applied during this period. The applied portion is the estimated amount. In this case, we estimated too much of our overhead. We estimated more overhead than what actually happened. So we were left with a temporary credit balance in this expense account. And we call this temporary credit balance an over-applied balance. So in other words, we have over-applied overhead at the end of the period. Now we need to get rid of that over-applied inventory. So at the end of the period, we want to close out our overhead account. And to close it out, what we're going to do is reduce this account to 0. But first of all, you need to know whether this balance here is considered to be material or not. If it's a material balance, then we would close the factory overhead account. Excuse me, if it's immaterial, then we would close the factory overhead account by debiting this factory overhead account and crediting the cost of goods sold. And that's assuming that that's 30,000 is immaterial. You would make a simple journal entry to reduce the overhead for $30,000. And when you do that, it will zero out this account here. But you're going to transfer the, for every journal entry, you have to have at least 1 debit and 1 credit. So when we debit the overhead account, we need a credit to go with that. And that credit will be to the cost of goods sold account. I want you to make sure you read this notation here, because this is important for you to understand. If the overhead balance is over-applied, which just means it has a credit balance instead of a debit balance, we will debit the overhead account to close the over-applied. So debit overhead to close the account. The over-applied balance means that we have estimated too much factory overhead. Remember, our applied amount is our estimated amount. We estimated 500,000, but the actual amount was 470,000. So we need to adjust our cost of goods sold account and close out the overhead account for this balance. Thus, the cost of goods sold account is too much. So we have to reduce it by crediting the cost of goods sold. Now, if the overhead variance would have been underapplied, which means the applied amount would have been less than the actual amount, you would have been thrown into a debit balance. And so you would have to reverse the costing entry out if the overhead was under applied. So we would credit the overhead account, and then we would debit the cost of goods sold if this had been under applied. It was not under applied. It was over applied. We had estimated more than what there was actual amount in the factory overhead account. Now, this is what you would do. You would create this journal entry here if the variance is immaterial. If the variance is material, we will prorate the balance of this overhead account into our work in process inventory, our finished goods inventory, and our cost of goods sold. So this is something new in this chapter that you probably don't know about. So there's two ways to dispose of factory overhead. One is if it's immaterial, this is the way we do it, and that's the way we did it in ACC 121. But in cost accounting, we're going to learn how to prorate the balance. If the variance is material, you will prorate the amounts to work in process, finished goods, and cost of goods sold. Before we can prorate it, we need to come up with the expense to prorate. The expense to prorate would be each one of these account balances. And so they've got work in process inventory has a balance of 100,000. Finished goods inventory has a balance of 200,000. Cost of goods sold has a balance of 200,000. If you combine all these together, the total of those balances, or the total applied overhead, is 500,000. If you add all these together, it's 500,000. So if we're prorating this, we're going to start with our work in process inventory. We're going to take the balance of 100,000 and divide it by our total applied overhead, which is 500,000. What that will do is it will give us 20% as the work in process percentage. Notice I took cell address B9 and divided it by B12, and that gives you 20%. That's your percentage that you're going to prorate of the over or under applied balance. In this case, it was over applied balance. So we're going to take 20% of the 30,000, and that's going to give us the amount that we will credit to the work in process account. So find your percentages first. That's just what I would suggest that you do. For finished goods, we take the finished goods balance and we divide it by the total applied factory overhead of 500,000. That will give us 40%. It just so happens that the cost of goods sold ended up being equal to the finished goods inventory. That's not always the case, but cost of goods sold is going to be divided by the total applied overhead. And that's how you get this percentage right here, 40% for the cost of goods sold. I've written all the formulas out for you, and I've actually calculated it here, class. Now we're going to put a money amount to these percentages. So 20% of the overhead variance, which was 30,000, is $100,000 that we would be reducing our work in process for in our journal entry. 40% of 30,000 is 12,000. That's going to reduce our finished goods inventory account. 40% of 30,000 gives you 12,000, which will reduce your cost of goods sold account. So this is the journal entry that you would create. You have a debit to the overhead account for 30,000. You would have a credit to work in process, finished goods inventory, and cost of goods sold. And these should be indented. I don't know what's happened here. We should move them over because your credits are always indented in the journal. But this is your journal entry right here. You debit the overhead account because you're reducing this overhead account to zero. When you debit it, it goes away. And then you have to spread that 30,000 out over work in process, finished goods, and cost of goods sold. So what I did basically in the next part, in order to balance these accounts, I just posted this journal entry. This was the balance before the adjustment that was given. The given amounts were right here. So you put in the balances before the adjustment first. Then this was the adjusting entry for that. I just posted each one of these as a credit. And then you find the new balance in the work in process account. Because work in process is an asset account, you're going to reduce the work in process by $6,000 adjustment. So this minus this equals the ending balance for work in process. Finished goods is an asset account. So its ending balance here is the debit side is the increase side. We're going to subtract the 12,000, and that's going to leave us with 188,000 ending balance in finished goods. The unadjusted balance, the balance before we did this adjustment here of 12,000 to the cost of goods sold, leaves you with an ending balance in cost of goods sold of 188,000. Work in process, finished goods will end up on your balance sheet. Cost of goods sold would end up on your income statement. In the last part of this, they have another what if analysis, or a what if analysis. And it says, what if the variance is of the opposite sign? What they mean by the opposite sign is they meant that it was under applied instead of over applied. Provide the appropriate adjusting journal entries in requirement 1 and 2. And so if it was in material and it was under applied, this is the journal entry that you would make. Remember, it's reverse of the over applied balance. So our cost of goods sold would have been debited in this case, and we would have had a credit to our overhead. This is if the balance in the overhead account at the end of the period was under applied, which means it's over on the debit side. And it also means if it's under applied that you did not estimate enough factory overhead during the period. So you're going to have to add to your cost of goods sold account. That's why you're doing this. And you would credit the overhead account to get rid of it. This is the journal entry that would be made if it is under applied and if it is immaterial. If it is material, this is what we do. We prorate it and we transfer it to work in process, finished goods, and cost of goods sold. Notice these are debits this time, whereas before we credited them. We debit it because it is a underapplied balance, and therefore this would add to the balance that they already had before. So work in process is going to be debited, and finished goods inventory is debited, and cost of goods sold is debited. Notice the prorated amounts are done the same way. We have to find that prorated percentage first, and those percentages were the same as they were before. The only difference is this is underapplied this time. So we are debiting the accounts and crediting the overhead account to get rid of it. And so that's the way that we would handle overhead variances and disposing of these variances. So in the next exercise, what we're going to look at is something that's different that you probably have not seen before. And so in this one, what we're going to be doing, instead of applying it, the factory overhead on a plant-wide basis, we're going to apply the factory overhead to the departments of the company. We're going to apply factory overheads to departments, and we're going to calculate departmental overhead rates for this particular company. And this is the given information. We are the Lansing company, and we're providing the following data for its 2 producing departments. So the departments are going to be the molding department and the polishing department. We're also going to be producing in these departments 2 types of products. We're calling those products Form A and Form B. Now, the estimated overhead for this company, for the molding department, the total overhead is $400,000. For the polishing department, the total overhead is $80,000. If you combine both of these together, the entire overhead for both of these departments is $480,000. The direct labor hours are given to you. These are expected and actual. So we're expecting, and what actually happened is for Form A in the molding department, there were 1,000 direct labor hours. There were 5,000 direct labor hours in the polishing department for Form A. The total direct labor hours for both departments is 6,000 direct labor hours for Form A. For Form B, we have 4,000 direct labor hours in the molding department. We have 15,000 direct labor hours in the polishing department. The total direct labor hours for both of these departments is 19,000. And then they did a subtotal of the direct labor hours for both products. Both products take 5,000 direct labor hours in the molding department, 20,000 direct labor hours in the polishing department. And the 2 of these are added together to get 25,000 hours for both departments, direct labor hours. For the machine hours for Form A, it took 3,500 machine hours for Form A in the molding department. It took 3,000 machine hours in the polishing department. the total machine hours is 6,500 for Form A. For Form B, the molding department had 1,500 machine hours. For Form B, the polishing department had 2,000 machine hours. The total machine hours for the product B or Form B is 3,500 hours. And then they added the machine hours together to get the total machine hours in the molding department, the total machine hours in the polishing department, and the total of both departments is 10,000 hours for the machine hours. Then they tell you that the machine hours are to use the assign the overhead of the molding department. This is very important information right here. Machine hours are used to assign the overhead of the molding department, and direct labor hours are used to assign the overhead of the polishing department. That's very important to know that. There are 30,000 units of Form A that are going to be produced during this period of time and sold during this period of time. And there are 50,000 units of Form B that are going to be produced and sold during this time. So I've restated that down here so we could make our calculations a little bit clearer for you. Now, one of the first things that they're going to ask you to do is they're going to ask you to calculate the overhead rates for each department. So we're going to do this for each department first. The overhead rates we need to calculate first for each department. So to do that, the formula I've written is right here. We're going to take the estimated overhead for the molding department. That's the amount right here. And we're going to divide it by the machine hours for the molding department. The total machine hours are 5,000. So in the molding department, I don't know why that jumped around like that. I don't like it, but it did. For the molding department, what we did, it really jumped around, didn't it? I'm sorry, class. Let me back up to where we were before. Right here's where we're at. The estimated overhead for the molding department was 400,000. 400,000 is divided by 5,000 direct labor hours. Nope, I'm sorry. It's not divided by direct labor hours. It's divided by machine hours, which is 5,000, to get the $80. So the estimated overhead for the molding department is 400,000. We're dividing it by machine hours because it told us in our instructions, machine hours are used to assign the overhead of the molding department. The machine hours just happen to be 5,000 in the molding department. But make sure you pick up machine hours and make sure you read this carefully. So 400,000 divided by 5,000 machine hours is $80. our molding department overhead rate. They also wanted you to calculate the overhead rate for the polishing department. So we're going to take the estimated overhead for the polishing department, which is $80,000. But notice the polishing department, direct labor hours are used to assign the overhead to the polishing department. So in the polishing department, we're going to pick up direct labor hours, which is 20,000. So 80,000 divided by 20,000 is how we get $4 for the polishing department. That's their overhead rate. For requirement 2, we are using departmental rates. These are the rates right here that we came up with to assign overhead to the 2 products. And they also want us to calculate the factory overhead per unit. So what I did is I broke this down and I calculated the total overhead cost for Form A first. This is the formula for calculating the total overhead cost. The total overhead cost for Form A is the overhead rate for molding times the machine hours, because remember in molding it's based on machine hours. The assignment of overhead is based on machine hours for the molding department. So we're picking up the machine hours only for Form A because we're only working to determine the total overhead cost that we're going to allocate to our first product, Form A. So the overhead rate for the molding has to be multiplied by the machine hours for Form A, and then we're going to add to that the overhead rate for the polishing department times the direct labor hours this time, because polishing assigns overhead based on direct labor hours for Form A. So be very careful and pay careful attention to this formula right here, because it's very important that you learn this formula so that you will know how to calculate the overhead cost for this Form A. You have to be able to calculate the overhead cost before you can calculate the overhead cost per unit. You need this first. So this is the formula for calculating the overhead cost. The total overhead cost for Form A is the overhead rate for the molding times the machine hours for Form A, plus the overhead rate for polishing times the direct labor hours for Form A. I'm going to click on this for just a second and let you look at the formula. Sorry about that. I don't know why that popped up there, but anyway, maybe you saw that, maybe you didn't. Sometimes I can see things that you're not seeing, but the total overhead cost, I'm just going to click on that so you can see the formula for that up here. This is where I'm getting the information. So the overhead rate for the molding comes from D26. The machine hours comes from B14. Multiply those, and then we're going to add the overhead rate for polishing times the direct labor hours for Form A. And that's how you get the total overhead cost. Once you get this overhead cost, you can divide it by the number of units produced of Form A, which was 30,000, and that's how you're going to get the overhead cost per unit of $10. So I'll click over here And you can see in the cell address how we have determined that. Again, it's 300,000 divided by 30,000 units that were produced. That'll give you $10 overhead cost per unit. And that's what they're asking you for in part 2 for Form A. For Form B, you're doing basically the same thing. You're calculating the total overhead cost first, which in Form B is going to be a total of 180,000. How we get that 180,000 is from this formula here. Our overhead rate for the molding department was $80. We're going to multiply that by the machine hours for Form B. The machine hours for Form B came from B15, which is 1,500. Then we're going to add to it the overhead rate for polishing, which is $4. And we're going to multiply that by the direct labor hours in the polishing department for Form B, which would be 15,000, cell address C11. Once you get the total overhead, then you're going to divide the total overhead by the number of units produced, and that will give you the overhead cost per unit of $3.60 in this case, or 3.6, but it is a dollar amount, so it's $3.60. Now, in this next part, they're just asking you a bunch of what-if analysis. It says, how does this compare with the plant-wide rate or unit cost of using direct labor hours? And so the plant-wide rate is your total estimated overhead divided by your total direct labor hours. The total estimated overhead is 480,000. It comes from cell address D8. And we're going to divide this by the total direct labor hours, because it says that we're using direct labor hours here. That's what they want us to calculate. So the plant-wide rate is $19.20. The plant-wide rate for Form A would be the plant-wide overhead rate times the total direct labor hours of Form A divided by the units produced for Form A. So the plant-wide overhead rate was $19.20. We're going to multiply that by the total direct labor hours for Form A, and that was given, and we're going to divide it by the units produced of Form A, which was also given. So you go back up to cell address D10 and divide it by B20 to get the plant-wide rate. The plant-wide rate for Form B is the plant-wide overhead rate, which was $19.20, times your direct labor hours for Form B, which was given in D11, and then we're going to divide that by the total units produced of Form B. The total units produced of Form B was 50,000 units. That's going to give you $7.30. So they're asking you, how does this compare with these? How did these compare with what you came up with up here? And so the answer is right here. The plant-wide rate was $3.84, but the overhead rate, if we calculated it based on departments, is going to be $10 for Form A. So it's a comparison of $3.84 to $10. That's a big wide gap there. So what they're getting you ready for, class, is the next part of the chapter, which is ABC costing, or activity-based costing. It's better than plant-wide costing and department types of costing if you have diverse products that you are producing. And so we'll talk more about ABC costing, but they're trying to get you ready for that. And you're just comparing, well, what if we did it plant-wide based? Or what if we did it departmental based? Or eventually, what if we do it activity based? What are the differences? And when would we use plant-wide and when would we use department-wide? But plant-wide could be used if you are not producing a whole lot of diverse products. And there's another rule about the total amount of factory overhead that we'll be discussing at some other point in time as we go through these problems. So they're just trying to get you to compare what's happening here. And then in part 3 is just yet another what if analysis. It's basically the same thing that you were doing up above. It's just that you're using different machine hours now. And so it's really the same thing that we did up above. And they're going to ask you to compare it just like we did before. So I think I've shown you enough about these two to at least get you started on your homework problems. And so I'm going to stop here because I feel like I've talked to you enough about this today, and you probably need to absorb some of this stuff. And so I'm going to stop sharing this with you today. You might notice that I'm going to post this too, that I also did an example of exercise 4.13, which is just a repeat of exercise 4.1. So I don't think it's necessary to talk about it, but I'm just going to tell you that it is there if you want to look at it, if you'd like to play around with having some more examples to work. And so, again, I'm going to stop here today. And thank you for staying with me. And we'll see you next time. Bye-bye.